Hey guys, today is April the 28th, 2022, and I want to go over the US dollar. I want to try to do a quick video. So without any further delay, let's get into it. I'm going to do a reverse. I'll start with the chart. This is my simple glance. As you can see, it is strong as a bull. It's above the cloud, above the moving averages. Everything looks positive, although we could be hitting this linear regression channel 104, but it's still strong and it could probably potentially still go higher. So everything looks good. Maybe it's a little overextended, but it's very bullish. People are piling in into the dollar. Let's go into what I call the squeeze play chart. And you can see that there was a squeeze play playing somewhere around the end of March, beginning of April. And then the day of April 7th, it triggered long and this explosion kicked in of higher prices. As of right now, we're at 103 and 92 cents and change, and we're just battling up there. What's interesting here is that on the Tom DMARC indicator, this sequential indicator, we at the ninth candle on the monthly chart. The euro has the same thing inverse at the bottom. So it'll be interesting to see how this month, actually next month, how next month will play. I wouldn't recommend getting long here. It's kind of risky. If you want to go long the dollar, I recommend just waiting for a pullback and then jump in. I'm on the sidelines. I'm just trying to see what's going to shake out in the next month. It is very strong, the dollar, and the euro is very weak. Next chart I want to go is, this is the linear regression channel. And this right here goes back 2001, July 2001, somewhere around there. It goes back all the way to that. That's the data set. This is the linear regression channel, and we're right here. This has the potential to go to 114 if momentum continues. Just wanted to give you reasonable targets. This chart right here, this is the weekly. This goes back 20 years. You can see the linear regression channels pointing up, but these are bigger linear regression channels within the data set. And there is a target of 107.27, somewhere around there. And if it continues pushing higher, it could go as high as 121. On this side, this is a 10-year daily chart. You got a target of 105 and 111. So far is chucking along. This chart right here is what I call the fib grid. And what I'm using it is from the swing low of that 70, 69, 80 to that first impulse wave on the weekly chart of $89.624, 62 cents roughly, rounding it off. And you can see that we have fib extensions all the way to that 108, 113, and then that 120. Those are big level targets. This is where we at right now, right here, kind of almost doing maybe like a triple top. But from what I see, I could see this thing pushing even higher, blowing through this. But that remains to be seen. All right, so that's for this clip. I'm going to show you the next clip of what I have to show you in regards to the US dollar. Okay, guys, here is the seasonality on the US dollar. And I wanted to show you what I'm noticing. I'll start off with the 5 years to just kind of get an idea. And I'm using pretty much Gann's years, which is the 5, 10, 15, and 20. As you can see, February, March are pretty strong. April is a little stronger. And then May and June are kind of, flat. There's no edge there. But July is the weakest within 5 years. We go to 10 years, Gann's favorite number. You can see that April is actually very weak. But if you look at price action on the US dollar, we're already, doing a triple top. We're at the highs at 103 and change. You can see that sometimes it doesn't work out. The dynamics of the market, all the news and current things that happen and the events, and whatever is happening in the world could always change thing, right away. And you can see that everybody's piling into the dollar. So right now, with the 10-year average of seasonality, it's the weakest, but May is pretty strong. Then June is a little weaker, and then July is kind of close to April. So just looking at the 10-year, what can we get out of this? Or what I get out of this, just looking at it, analyzing it, and thinking what traps could be out there. What could possibly be where they could trap the bulls and the bears, especially the institutions and the hedge funds and the smart money? Well, that, everybody looks at the graph that I'm looking at and look at the data and, and makes a calculation. You know what? May is strong. Maybe into next month, we're going to push even higher and maybe kiss that 105, that 108 level I showed you. They could even push it to 114. Who knows? Whatever the limit. There's no limit. As long as there's momentum, people are gonna have FOMO, fear of missing out, and they're gonna want to jump in. But then it's gonna come to the point, and you could be like the crypto boys and girls that, we're going to the moon with the crypto and the Bitcoin. Everything's going to the moon. In reality, that's never been the case. They'll go high, but it's going to come to a point mathematically with certain calculations or whatever. The instrument you're trading is going to find a resistance level, and then it's going to turn. And that's what you try to figure out using, Gann's theory and calculations to try to get ahead of that, or at least be aware where that possibly could happen. But either way, May could be where the trap could possibly happen. But if you've seen my video on the seasonal trap, sometimes of what I've noticed is that they'll bring it up high in May and then let it pull back. And in June, they'll push it even higher because all the people that watch seasonalities and the seasonality traders and cycle traders, it's gonna turn in May. They start going short early, and then they blow those stops off, push it even higher, and then they get the bulls. Oh man, the seasonality is not working, and the cycles are not working. Let's pile in. It's gonna go and kiss $121. It's gonna go and do an all-time high and even go higher. And then they trap them as it goes higher, and then they pull the rug, and then boom, the dollar starts crashing straight down into July. This is me speculating, hypothetically. That's in my mind. Now that I see certain things, I have to even be open even more to, other, scenarios and other, outcomes. Not just that, it's going to top out in May and then it's going to pull back. If prices continue going higher into June, then like I've always said, June will probably even be more dangerous than May, because that's probably where the potential trap will be to get the bulls and the bears and then, tank it down. But anyway, I digress. I just kind of wanted to elaborate on that, on how I kind of see this seasonality thing. So let's go into the 15-year on Gann's number. And you can see that May is strong as November up there. So I could see us even pushing higher into November and maybe into June to do the seasonal trap and then, pull it into July. But, that's me thinking, just looking at the data set. And lastly, I'll use the 20-year, and you can see that April's a little weak and May is strong, pretty much up there with November. And then June is a little weaker and July is a little weaker. So that's the seasonal data set. Hopefully this gives you a clue, that we're getting close. If you watch my Euro video, something's going to be happening between May and June, and you just have to just keep watching it and setting alerts and monitoring it and watching price action. All right, we're going to go to the next clip. So here we have seasonality on the US dollar. As you can see, the dollar is strong. I use this chart just to kind of pinpoint dates and just kind of see what happens on the averages of the 5-year, 10-year, and the 15-year. So we'll start out with the 5-year. With the 5-year, you can see that we're right now on the 28th. If you hear a lot of honking and a lot of noise in the background, I'm in Chicago right now. Beautiful city, reminds me of New York, and it's cold out here. But anyway, Detroit was good. It was kind of gloomy and kind of rainy, but over here there's a little drizzle, but reminds me of New York, the city that never sleeps. But anyway, let's get into this chart. You can see that on the 5-year, it gets toppy on May 5th, and then it pulls back into June the 8th, and it goes up roughly around the 17th, and then it ends in July the 27th, around there, 29th, and it kind of goes sideways. So we're looking for a potential swing high in May, as the chart says. May 5th will probably be your date you want to look at. We take the 5-year off and add the 10-year. You can see that with the 10-year average, it should be pulling in, and around the last week of April, it gets this nice little pop all the way, roughly till like May 26th. I know in the euro it was May 29th that it will like sell down. So May 26th, that week, last week of May, potential peak, and then it pulls back into June and kind of goes sideways. And then lastly is the 15-year. Same thing. It pulls in and it has kind of like double peaks here. May 17 reminds me of the euro, and also like May 26. When you add the 15, the 10, and the 5, those are the dates you want to keep your eyes on. May 5th, especially that last week, May 26, and May 17 for potential tops. Not that means it's going to play out. But like I said, they could also do the trap where they'll push it into June and get the early bears that went short and blow them out, and then get more bulls to go in long and then pull the rug and then trap everybody, bulls and bears. So keep in mind of that. Those are the possibilities, And the other thing is that nothing happens and it just goes sideways. That's also a possibility too. We'll go to the next clip. Okay, here's the US dollar index, the DX, and I'm using a data set that goes all the way back. It was normally ending here, but I had to go all the way back because I just want to see the big picture. And this one is from like 2001, May of 2001, weekly closes, all the way to current prices that we have right now. So first off, we'll start off with, I guess, the stronger cycle in regards to Bartels. It's the 180 cycle. Let's dissect this and look at it. Looking at this graph right here, the correlation is pretty strong. As you can see, it's not perfect. We peaked here in September, and the high came in March. So you can see that sometimes price action, takes a while. Like I said, it's price action is king. But when the cycles are down, you just got to be careful because it could go down right with it, and very fast. And you can see that this was pretty good. Gann's theory is, if you think there's a possible swing low, wait for that first correction, pull back, get in, and you can see that it got in. Looking at this more, closely, and I haven't even put this on my Elliott wave chart. It looks like this is a 1, 2, and we're working on a 3. So what if in May, possibly we make a swing high, push back down into maybe June, July, and then continue pushing up to do a wave 5 into the future. Just something to think about, because this looks like a pretty nice wave 3, or pull back, June, and then in pull back in July, June, July, and then finish a wave 5 into the end of the year, November, December, because this 180 cycle peaks around November. You can say the last week of November, first week December, the 180 cycle peaks. But this one is a good one. It's the strongest one in regards to Bartels, and the cycle is up. So this the dollar could continue pushing higher. Next off will be the 235 cycle, which is this one right here. And you can see that this one just bottomed out in January of 2022, and now it's in an upward cycle, projecting for a peak somewhere around April, the first week of April of 2024. So, the cycles are in favor for the dollar to go higher. If these cycles continue becoming strong. So you got two that are, bullish, and the 180 is bullish only until, November? That's where the peak comes in, and then it pushes down until August of 2024. So if we do a composite of those two, let's see what possible outcome could be. Yeah, so this is what it is, somewhere around April of 2023. We kind of hit a peak, and then it pulls back into December of 2024. And, the cycle hasn't even developed. These are big levels here. The dominant cycle is 86. So it's a little shorter. You can see that the correlation is not that great. We just hit a peak on November 15 of the week of 15 of 2021, and the bottom comes in September, like the second week of September of 2022, and then we hit a peak of July the 24th that week of 2023. So if we take the 86 and get the 180 and get a composite, this actually looks a little more realistic of it pulling back and then pushing in, going higher. I can see that happening. So possibly, May being up top, or the seasonal trap where they trap you in June, pull back in, and somewhere around July, which kind of lines up of this year, and then continue pushing higher, which makes it look like a wave 5 ending somewhere around May of 2023. Just what I see. I'm not saying it's going to happen exactly, but it's something for you to think about and chew on if you're into the dollar or euro or gold, and somewhere around there, kind of drop off or whatever happens once we get there. The next clip I'm going to look at is the daily chart and see what clues we could get, there. Okay, I think this might be my last video or clip. I don't want to make this video too long. This is the daily chart, and the data set I'm using is from 2018 of July. These are daily. This is a daily chart, daily closes. So running the cycle analyzer, there's 3 that are important here. That one will be the 228. It's not as strong. It's there, and I figured I'd just show you. The 92 and the 61 are a little stronger. You can see that this one peaked out here in March the 14th, and it finds a bottom around July the 17th, which makes sense in regards to the seasonalities I showed you on the earlier clip of, potential, July being weak. So this could be like the trap where the dollars continue going higher. Eventually, they'll pull the rug, and then the cycles, price action probably will come down into July. There's another one, which is the 61, which is pretty strong. As you can see, is a little more fractal. The correlation here is not good. It's not great. This one also peaked in the last week of March, and it finds a bottom around the first week of May. And as you can see, price action is still going higher. And then the last one is the 92. And you can see that on the 92, it peaked around the 18th. And I'll find a bottom or a trough somewhere around June, the first week of June. But hopefully this helps you. If you like this video, give it a thumbs up. And I'll keep you posted on the dollar and the euro and, eventually on gold, because those are the things. Euro, I don't really trade it. I don't do currencies. I like to watch it, and someone mentioned this to, do an analysis, and now I'm interested because we're approaching, key levels of demand. There's a lot a lot of moving parts here going on right now, so it's kind of sparking my interest to, look into it and decide if it's a good opportunity to place a trade on these in this currency dollar, kind of situation. I'll keep you posted on my thoughts using WGAN, price and time technical analysis.